Hello, everyone. Joel Fiesel here, your financial agent for life insurance and annuities. Today, I want to share a success story about um, a situation where I was able to get someone life insurance that didn't think that it was possible because of their health. So, I want to share this because if you're in a situation where you have really bad health, or maybe you just had cancer, you had a heart attack, you just had a stroke, something major, and you've gone out there and you've been declined everywhere, and you just don't really know where to look, this story is for you. Or if you know somebody that's in this situation, please share this with them. And what I did, and kind of just to give you the situation. Now, realize that I've used this strategy for clients in similar situations. So this particular one was a male that was in his 50s that had recently had cancer. He just completed the cancer treatments. Now, it wasn't prostate cancer because there's a lot of companies that will take prostate cancer once their treatment has or once their treatment is ended. But in this case, was a more serious type of cancer. And just to be real straightforward, I don't remember the exact cancer, but it might have been like colon or melanoma, something more serious. Okay. And so what happened was he had been turned down and kind of given up, and he was looking for about $200,000 in coverage. And so what I did is I researched out, and what I found was that a guaranteed issue whole life policy he could definitely qualify for. And let me explain a little bit about guaranteed issue whole life insurance. So guaranteed issue whole life, it like it sounds, it's guaranteed issue. And most companies will cover you if as long as you're between the ages of 50 to 80 when you apply for coverage. Okay, guaranteed issue whole life will go to, most of them will go to age 100. Some might go a little bit longer than that. And there are some other ones that go younger ages or older ages, but the majority of them will cover between ages 50 to 80. Now, the max coverage they'll do is 25,000. Now, there is a 2-year waiting period. So if you die in the first 2 years of natural causes, then it returns the premium plus interest, and most of them will do 10%, some will do 5% interest to the beneficiary if they pass in those first 2 years. The majority of them will, if you die in an accident, will pay the full benefit in the first 2 years. Otherwise, day one of year three, the majority of them will pay the full benefit. With this being said, he needed 200,000. Okay, so I know I could get him 25,000, and I also know that his budget, he wanted to spend under $200 a month. And so it might have been lower than that, but I know for at least what was that. And so basically, what happened was I presented this option to him, and then what I did is I found an accidental policy. It's a guaranteed issue accidental policy. Same thing. It guarantees that it'll cover in the event of an accidental death. And so accidental death is, anything defined as an accident that causes death. And most policies will pay out if the death is within 90 days of that accident, will pay out. Some of them will go longer, but that's the majority of them. And so now you need to check, if you do get one of these, you need to check, how that policy works. But what I did is, because he was looking at this to have enough coverage to pay his mortgage off in the event that he died, for his family. So I found another policy that we could do 200,000 on if he died in an accident. And so my thought was, well, if he died of natural causes, at least after the first 2 years, it would pay out a guaranteed 25,000 to his family, and they can use that. If he died sooner than later, they could use that to help pay the mortgage for a period of time and allow them to kind of figure out what they want to do. If they need to sell the house, whatever they need to do, gives them some time. My other thought is, if he died in an accident, because the guy is pretty young, besides the cancer, he's still pretty young. And so basically, that would have a chance to pay out that full 200,000 to his family. And so now I have situations like this a lot. And when I present this, sometimes I have somebody that just buys the guaranteed issue whole life. In other cases, I have people that just buy the accidental. And then in some cases like this one, I have clients that will buy both the guaranteed issue whole life and the accidental policy. So this is just a strategy that could help out if a situation like this, if you're in the situation where you can get some at least guaranteed issue whole life insurance, and possibly if you want to add the accidental or one or the other, you can do that as well. And so there are some other cases before where I've had people that were, wanted to have more guaranteed issue whole life. Well, you can stack policies. A lot of carriers will do up to 25,000. Some carriers will limit it to about 10,000. But if you needed 100,000, we could definitely help you get that. And I just wanted to share this story with you because I know if this is you, we can definitely help. I know if you know people, we can help. So please share this message with others. And if you would like to speak to someone about this type of coverage or about this type of strategy, I'm going to include the link below to our website where you can actually request to talk with someone. With that being said, I look forward to our next meeting, and over and out for now. Bye-bye.